Learn how to trade at the money options straddles. This is what we're doing today. We're talking about straddles, how to find them, how to have an edge in the market with Market Chameleon. So let's get started. And before we do, read disclaimer. Feel free to read all about it. My name is Zip, also known as Finance After 40. This is not a financial advice. This is for educational purposes only. And with that being said, let's start with Straddle screeners. So when you first log into Market Chameleon, of course, 7 days link in the description if you haven't signed already. And you got all the trade ideas, but first we're gonna focus on this. You're gonna click screener, okay? We are doing Straddle. I'm gonna explain a little bit what it is, and then I'm gonna show you some trading edge ideas. Not all of them, but just how to scan and all that stuff. So click Straddle, add the money right here. And in here you got this nice screener. Now before we start, here's Microsoft they post today. Before we start, just FYI, a straddle is basically you buy at the money call and simultaneously you buy at the money put. And I'm sure it says here, I'm going to read it in a second. And you are basically betting that the stock will go up or down post an event, which is most likely earning events. So you gambling basically, or not gambling, more like an educated guess that the stock will go higher than the price that you pay for the call and the put simultaneously. And that's why you don't care if the stock will go up or down. You just care that it will go up or down more than the amount that you pay for the options. So it says here, use this screen to evaluate current at-the-money straddle valued against historical theoretical value. We compare the current market price of the straddle bid and offer to a theoretical value created, okay, by analyzing results of historical price return distribution. The risk of selling option is not limited to the initial cost of the straddle. We're not doing the sell. This will be a different video. I'm just showing you the buy. Selling straddle is a whole different strategy, but now we're doing the buy strategy. The risk tab shows the amount at risk of the straddle given multiple high risk scenarios for the stock price. Use filters, to narrow your search, which is exactly what we're gonna do now. So this is like the first default, and if you scroll down, we got 222 pages. Now, I don't wanna trade straddle. I wanna trade like the stuff that people know, the Microsoft, the Teslas, and all that. So first of all, you got two options in here. One is undervalued straddle, which is a buy. Okay, so you buy the undervalued straddle, you find theoretical edge. We're gonna see some trade ideas and opportunities. And the second one is to sell straddle with theoretical edge, which we will leave for a different video tutorial. So let's focus on the first one. Let's click undervalued straddle. And expiration, let's do the monthly. I mean, it can be the next 30 days, but I just like to trade monthlies when I do stuff. So I pick, and you can pick weeklies, you can pick whatever that you want, but the monthly right now is August 16. Now next, I'm gonna do market cap over 10 billion. Okay, you can play over 100 billion and all that, just to stay safe and all that. And a few more stuff, stock type, common stock, okay? And average option value. In here, I like to pick 10,000. What does it mean? It means that in a given day, on average, about 10,000 options and above are trading. So it's a liquid stock. It's, as I said, it's the Nvidia, it's the Microsoft, it's the Teslas and all that. It's not some random stock that has earning, but there's no liquidity for the option. So even if you wanna take the trade, you're gonna pay on the spread between the bid and ask. So I'm gonna click above 10,000. Let's see if we got anything else in here. We got, but still, we got 6 years in positive analysis, theoretical edge. I wanna have, I'm changing the theoretical edge to at least 10%. And I'm gonna change the win rate to at least 60%. Okay, and you can play around with that, but that's what I like to okay, so that's not too much. So let's change this to over 50%. Let's see what we got. And now we got one page. Okay, One page is fine. It's better than zero. So we got one page instead of 222. See? And now we got, look at those stocks. We got ourselves Apple, Berkshire, Bank of America, Alibaba, Uber, Palantir, Coinbase, the Oxy, AIG, Moderna, Roblox, the DraftKings, and Twitter. Okay. Those are the options that basically have over 10, and you can filter back and forth. It's up to you. I'm looking at the buy straddle. Now again, it means that you are buying at the money. You're not buying. It gives you trade adheres to buy at the money straddle, call and put, but based on history, based on information, those straddles are cheaper than what you're supposed to pay. That's what it tells us. It doesn't mean that you will win. The stock can stay the same price by expiration and you will lose your money. You are making your money if the call and put options, one of them that you paid the whole amount that you paid, if the stock moves above that's all. So this is your trade. Basically, this is the trade that you take. So you can change here, and you see I would like to do you can do either by win rate, but I like to start with theoretical edge. You can play around with both of them. I'm gonna show you real quick. So this one, let's see, there's Palantir. We're gonna check both of them, but let's start with Oxy 0xy. Okay, stock price today is $60.22. And the market price right now that means the market for the straddle. You see, straddle price $300, free or free. It says here the current market price for either the straddle bid or straddle ask, $300. But theoretical value, look at this, 657, and this is your edge, 117%, 116.9. There's a 15% win rate. I'm not gonna click. If you wanna check, you can click on the expiration date. Basically, it says next earning August 7th, so the earning comes before the expiration. At the money implied volatility of 25, that's low. I mean, the lower it is, the better to be a buyer instead of a seller of the option. Straddle implied move 4.8%, so the market expect a 4.8% move based on this price. And potential catalyst, we got earnings and market economic events. So you can click here and it says the Fed Reserve, the FOMC, but okay, so the Fed Reserve, that's for most of them, that's July 31st, PMI manufacturer, employment, this is great. Employment situation report, consumer price index, retail, so all the stuff comes before the option expire. All these news events plus the earning on August 7, and it says after market close. That's very, very valuable information to learn. But what you need to know is now your break even. Let's say you take this straddle, you are paying $300, so your break even is around $63, but in reality, based on history, you should have paid $66.57. So now your break even is 63 instead of 66.57, something like that. That's a good edge, and you need to find an edge in the market. So if you're looking for a straddle to trade and you just go random walk over Robinhood, or YouTube and don't know what to do, check this screener and see what else. Let's check another one. Let's check Palantir just real quick, okay? And of course, as I said before, next video we're gonna do the sell straddle, which is how to collect a premium and income from selling straddle that are cheaper than the buying straddle. Okay, so Palantir, a lot of people are excited about this basically earning, about this stock. I'm sure you know about Palantir, millions of videos about it. Palantir price today 27.21, okay, 60 billion market cap, and it tells you that the straddle itself is $4, $393, let's call it $400. Theoretical value 712. I'm actually very impressed that the straddle is cheaper than, okay, that means that the IV, the at the money implied volatility, okay, 75, interesting. The straddle implied move 14.1%. We got 82% theoretical edge. It means that you are paying only $4 compared to $7. You pay almost half. That's crazy than what you should have paid for this straddle. That means that your break even, let's say 4, is either $31 to the upside or $23 to the downside. And if Palantir goes above 31 or below 23, you are making money on the straddle. If it goes anywhere in between, you are losing money, and your max loss is at basically here if the stock doesn't move by expiration. With a buy, you can click here and you see next earning August 5th. You can click and see the trade idea specifically. And it says the straddle 27, 75% at the money, but the move, the expected move is 14%. You got earnings and you got market economics. So yeah, a lot of stuff. So 14% from this is about, let's do a quick calculation, 21,141 just for the example. 31 plus probably to the other side. Okay, so 31, 27, 21 times 0.85, I don't know, 859, something like that. 23, yeah, as I said, 31 or 23, give or take, that's your break even. Now, if it goes exploding 30% up or down post earnings, yeah, that means that your straddle will make money. Will it happen? I don't know. It doesn't tell you. Again, Market Chameleon doesn't tell you if the stock will go up or down. It just tells you that based on history, there's a cheap straddle now that cost $400 compared to $700 in the past. Something to consider, something to think about if you are planning to do so. I will probably look, just for me, we got Coinbase, just 3,500 compared to 4,600. There's Apple here, a price of 220, 219 and a half, and the straddle is 12.5 compared to 1,500. So a lot of people are betting on a move for Apple as well, 5.7%. It's something to consider. Okay, it's something to consider. Straddles, but this one, the 117%, the Oxy, caught my eye. Just $3 compared to 650. Anyway, that was just the buy side. How to use the screener about at the money option straddle screener using Market Chameleon. If you haven't already, there's a 7 days link in the description. I hope this was valuable. I'll see you next time.